GameStop stock analysis. Okay guys, so in this video we're going to do a fundamental and technical analysis of GameStop stock. So right now, all of the brokerages and mainly Robinhood is still restricting people to only purchase one share of GameStop, guys. So this is one of the reasons why I recommend, before we get into this video, that you guys switch from Robinhood to Webull. Why switch from Robinhood to Webull? Well, simply there are no restrictions on Webull. Webull did halt trading for like an hour or two, but there are no trading restrictions on Webull. You guys can buy GameStop stock as much as you want. You don't have to deal with these share restrictions. And one of the best things is when you sign up for Robinhood, they only give you one free share of stock. But if you sign up for Webull using the link in the description and open a brokerage account and deposit at least $100, you guys will get 4 free stocks, guys. So you get 4 times the amount of free stocks you would get at Robinhood and no trading restrictions. Okay, so back into the video, guys. What is going on with GameStop? So I talked about the whole short squeeze situation. Be sure to check that previous video out that explains what's been going on. So now what we're going to do is we're going to take a look at things kind of from a more fundamental technical analysis, guys, because that's really what this channel is built on. We're looking at companies that are going to be growing along with future growth trends. So a lot to talk about in this video, guys, so be sure to smash the thumbs up button right now and stay tuned. We're going to dig into GameStop. So first of all, if you guys aren't really familiar what's been going on recently, just to brief you guys really quickly, be sure to check out my previous video for a more in-depth briefing. But basically, GameStop stock is being short squeezed. So short squeeze means simply that these stocks have a super high short interest. You can go to this link in the description I'm going to post called highshortinterest.com. So basically, GameStop stock was the highest shorted stock on Wall Street, which means that the short interest was over 100% of the float, which means that these short sellers were basically borrowing borrowed shares. So they were literally shorting the shares that they were shorting, which means that this could end terribly for them if retail investors end up buying up those shares in droves, because it will force them to buy the stock back at a much, much higher price. So that's basically what's been going on places like Reddit and Twitter, Facebook, and places like that. People are basically working together and buying up GameStop stock because they want the short squeeze to send the shares much higher. And that's exactly what was happening until brokerages, especially Robinhood, came in and said, you can't do this because our short seller customers, mainly firms like Sidell and Melvin Capital and Point74, you can't do this because we're going to lose billions of dollars. And so far this year, short sellers have all basically lost over $70 billion. And we're just into January, guys. So, what's been going on is that Robinhood limited the trading so these short sellers, these hedge funds, wouldn't suffer massive losses. But here's the interesting thing about GameStop, and I wanted to do this video because I was really taking a look at what some of these people have been saying. Mainly, a lot of people have been coming on CNBC. The Robinhood CEO, the Vlad guy, he came on CNBC and did damage control. But I was really shook by what James Cramer said. He basically told us to just basically we hit a home run, take your profits and go home. And, once Jim Cramer came out and was kind of doing damage control for a lot of these hedge funds and things like that, I wanted to really take a deep dive look into the stock and say, well, is there something else here that I'm missing? Obviously a lot of people are just buying GameStop stock. Maybe they don't even play video games. They're just buying it because people are sick and tired of hedge funds basically plummeting the value of good companies with hardworking people in it, and basically causing a lot of companies like GameStop to be on the verge of bankruptcy. And one of the things that happened is one of my favorite stocks that I own, Genius Brands, has been crushed by short sellers. So, I'm going to be posting another video on that as well. But these short sellers are basically borrowing these shares and driving the stocks down, which is causing retail investors like you and me to lose a lot of money. And it's hurting these companies' growth because they can't grow if the share prices are constantly crushed by hedge funds like Citadel, Point74, and Melvin Capital, guys. So let's check things out. And as we can see here, this whole trade limitation they basically did this to limit the volume of GameStop. So before these halts, you could see here there were over like 170, 190 million shares traded. And then after these restrictions, the volume is way down, guys. So this is not, something, oh, they can't handle the trading volume or something like this. This is simply a scheme to prevent the price from going up, because as you can see here, the volume was just skyrocketing. We were already at 178 million. Looks like it was going to 200 or more, and those restrictions basically stopped that, especially in Robinhood. So first of all, let's take a look at where the whole gaming trends is going, because we recently had some new consoles released, mainly the PS5, where people are going crazy over it over the 2020 holiday season. And the reason is that if you guys didn't know, the video gaming industry is one of the biggest industries in America. So it says this is on Market Watch, says video games are a bigger industry than movies and North American sports combined, thanks to the pandemic. And it says here that global gaming sales rose to $180 billion in 2020, and experts don't see growth taking a hit in 2021 after the release of next-gen PlayStation and Xbox, guys. So this is basically, gaming is going to be a monstrous growth industry. And one of the reasons is you have 5G coming. You have a lot of people who have gotten used to being at home for extended periods of time. And, you being at home and things like that, there's not much else to do. Obviously, you can watch Netflix or television, but a lot of people are turning to gaming. And, one of the nice things about a company like GameStop is that they're the largest gaming retailer in the entire world, guys. They have like over 5,000 retail stores spread out all over the world, mainly in North America, but also they have locations in Europe and other places as well. And as you can see here, there's growth in this industry. So, gaming has grown quite nicely, 139 billion in 2018. Moved up to 2020, and these numbers are going to continue to simply grow. And one of the reasons why these numbers are simply growing is that obviously with the release of the PlayStation 5, faster internet connections and things like that, there's a surge in mobile gaming as well. That's a great market that's going up. And then basically one of the biggest catalysts is obviously the release of that PS5. People went crazy for it over the holiday season, and it was basically sold out everywhere. So that really helps companies like GameStop, because they make a lot of their revenue selling games and consoles and stuff like that. And sales are moving in the right direction. So what I also want to talk about is something else that I think GameStop can benefit from, and that's the growth in the esports market. So if we head over here to Grand View Research, we can see here that esports revenue is growing like crazy with a compounded annual growth rate of 24%. So if you guys aren't familiar with esports, it's basically like, going to, a basketball game or a baseball game or something like that. But you have these stadiums and you have basically professional gamers who are basically playing games online, and people are, buying tickets and watching them. So there's a really big website out there called Twitch. This is exactly what it does. And you can see on YouTube itself, basically gaming is the most popular niche in YouTube. People love watching other people play games, especially really good players. So you have an audience watching people playing things like NBA 2K, Call of Duty, et cetera, et cetera. So this market is going to explode. So this is one of the reasons why I think GameStop is one of the better stocks to play out here. So now we're going to talk a little bit more about one of the bigger catalysts to GameStop, and then we're going to talk about the fundamental numbers and some technical analysis. Okay, so another catalyst is basically the stake on GameStop that was purchased by Ryan Cohen. So Ryan Cohen, he started Chewy, guys. So Chewy, I talked about Chewy. I mentioned it last year on this channel. Chewy is basically the largest niche pet e-commerce store in the United States. And this guy, Ryan Cohen, he's 35 years old, and he ended up selling Chewy to PetSmart in 2017 for $3 billion, guys. And right now, Chewy is $100 stock. One of the good things is that this guy, end of last year, he bought about 9 million shares of GameStop worth $76 million. And he wrote a manifesto talking about a couple of ways how GameStop was basically behind the times, how they were focusing too much on brick and mortar sales, and they should be focusing on their e-commerce business and things like that. And he's absolutely right. So, anytime you have, a young guy who has experience growing a successful e-commerce business. So he did this with the, pet supplies and things like that with Chewy. So now he's moved on to GameStop. And one of the reasons I think he's moved on to GameStop is that I just think there's just more growth in the video gaming industry. Anyone can play a video game or a mobile game, but, a lot of people don't own pets. So he's basically just moved over to GameStop and bought a huge stake in this company. So this is one of the reasons why this stock is going up so much, is because of the Ryan Cohen catalyst, guys. So now what we're going to do is we're going to dig into some of those fundamentalist numbers and wrap things up with some technical analysis, talk about a price target. So after watching Jim Cramer especially say, just sell, take your profits and things like that, the stock has run up too much. He said the stock is worth 4 times as much as it should be, yada, yada, yada. So what I did is I just simply went into Yahoo Finance and I wanted to take a fundamentalist view of GameStop. I didn't want to basically, just buy the stock based on, obviously, sticking it to the hedge funds. And I did buy some of the stock as well, but I think it also not only making money off of this short squeeze, but I think that there's some fundamentalist reasons to own GameStop stock. So one of the things that kind of stood out to me is that if we take a look at the trailing 12 months revenue, it's over $5 billion. So there is definitely some potential here in this company. So, they have over $400 million in cash on their balance sheet. And one of the biggest problems is, of course, is that the revenue growth has been going down. So once again, we have a company here that obviously has a lot of revenue coming in. They have a lot of loyal customers and things like that, but they're just simply, spending resources in the wrong direction. They're focusing too much on brick and mortar stores, and they're not focusing enough on e-commerce sales. So according to Cramer, the stock is too expensive. You should just, take your home run and walk away. But take a look at the price to sales ratio. It's only 4. So I did some digging on some other stocks in similar industries. So I'm going to show you guys some of these other stocks and take a look at their price to sales ratios. And you tell me if you think GameStop is grossly overvalued. Okay, so what I did is I simply went to FinViz and I performed a screen. So I screened out basically internet retail stores, because I think that's where GameStop is moving in the future. They're moving more so towards e-commerce sales, and that's basically what they talked about in their latest quarterly report. So as you can see here, you can see it says omni-channel capabilities fuel 257% increase in global e-commerce sales. So because of Ryan Cohen and things like that, as you can see here, it says we increased e-commerce sales 257%. So, this is the latest Q3 2020 report. GameStop is becoming not really a brick and mortar retail business, but they're becoming an e-commerce business. So if we take a look at some of these other e-commerce stores, as you can see here, Fiverr, that's at a price to sales ratio of 44. We have Jumia, the Amazon of Africa, that's at 20. Alibaba's at 7. Amazon's at 4. Chewy, the company that Ryan Cohen founded, that's at 6 at a price to sales ratio. So, according to all of these, according to price to sales ratio, eBay is at 3, Overstock's at 1. So, according to price to sales ratio, this is one of the ratios I use, the metrics I use to evaluate businesses that aren't necessarily generating profits, because the company isn't profitable net income, you can't calculate a price to earnings ratio. So 4, that seems cheaper than, some of these other companies out here, with a price to sales ratio of 4. It seems more than reasonable, considering that if you take a look at some of these other companies, their price to sales ratio is lower than Amazon. It's lower than Chewy. It's lower than Alibaba. It's lower than Etsy, Jumia. So I don't really see where this whole claim from Jim Cramer and other people saying the stock has run up too much, it's overvalued. No, not really. Considering that we have these trends growing, it looks like there's a lot more upside in the company, because right now it's just not profitable. So what happens if Ryan Cohen and all these other people get behind the company and turn this into positive net income? We could see a lot more growth in this stock. And one of the reasons why is that I think basically GameStop is just learning a lot of things from Amazon. So if we head over to the website itself, now guys, I haven't shopped at GameStop in years, probably since I was in college and high school, because back then, basically I would just go to the mall and head over to GameStop and pick up the latest games. But look at the changes that GameStop has made, and this was really impressed me. So I headed over to their website, took a look at Call of Duty Black Ops Cold War, their bestseller on PS5s. First of all, they have a Power Up Rewards Pro. So this is something new that was not there when I last shopped there. It's basically like Amazon Prime. They allow you to sign up per year, and it gives you lots of extra perks like credits and stuff like that. And it just it's just really awesome that they're building in this recurring revenue. So we all know that recurring revenue is crushing it. And look at Netflix, look at Amazon Prime. Getting people to subscribe to a long-term subscription is great for customer retention, and it's just good for the bottom line. It just brings in that money. So as we can see here, they also have payment plans as well, and something new that they didn't have before, they have ship to home and free store pickup. So you can also buy this game, go to GameStop if you want to, and if you want to stay at the comfort of your home, they'll deliver it to you as well. And then they basically are doing the same thing Amazon's doing, offering bonuses, a nice product description, answering questions. You're able to leave a review on the game. So, this company has changed so much since I was, buying video games back in high school and college. And I think that's one of the reasons why the stock is running up so much. I don't think it's obviously a lot of it is, people on Reddit. They really want to stick it to these hedge funds who bankrupted our economy back in 2008 and 2009. But there's a lot of future potential in this company. And it's currently only trading at a market cap of 22 billion. So 22 billion is not an outrageous market cap. Chewy is trading at a market cap of 42 billion. So, is Chewy worth twice as much as GameStop, where video game industry is bigger than sports and movies combined? So obviously there's a lot of potential here. And that's one of the big reasons why the stock is up over 8,000% over the last year, guys. So to give you guys a price target for, GameStop. Like I said, guys, obviously do your own due diligence. Remember now, never invest money that you can't afford to lose. And, just be prepared for anything, because we don't know what Robinhood and other brokers will do in the future. If this stock gets short squeezed, like I think it will, it could ramp up much higher. But looking from a technical analysis, we can see that the stock is continuing to make higher lows. So obviously, we don't know exactly where all of the resistance is going to come in. And this resistance was caused by basically brokerages like Robinhood stopping you from buying shares. But as we can see here, we have a low here of 81, then another low of 130, then another low of 200, then another low of 250, and then another low of 300. So, maybe like obviously intraday, like day to day, the volatility is high, but over the long run, we're moving up. And that's one of the reasons the stock is getting so much attention, is that it's not just a junk stock, and things are looking a lot better. So what I'm going to do, I'm going to give you guys a conservative price target, and I'm simply going to just take the market cap of Chewy, which is 42 billion, and using the market cap of GameStop. I think GameStop is worth at least as much as Chewy. So obviously Chewy is an awesome stock, awesome pet stock. They're doing a lot of nice things here. But as you can see here, if we take a look, we go back, head over here, we can see that Chewy is at a price to sales ratio of 6.5, and GameStop is currently at a price to sales ratio of 4.3. So if we were to basically use the exact same price to sales ratio of Chewy, that is basically the company that Ryan sold, and put it, that will give us a conservative price target on where this stock is potentially worth. And I'm going to give you guys a more longer term price target. Okay, so what I did here, I simply just took the price to sales ratio of Chewy at 6.5, and then I multiplied it by the trailing 12 months revenue for GameStop, and that would give us a market cap of around $33 billion. So considering that the market cap right now is around 22 billion, that means that we have a potential kind of basically around just under 50% upside in this stock, which means that a fair valuation based on the price of Chewy or something like that, if you were to use Chewy as an example, that would be around like $450 per share. But since the market cap of Chewy is twice as much as GameStop, I think that GameStop is more realistically about a $600 stock. So that's kind of where I'm valuing the stock right now based on the fundamental analysis. And looking at the technical analysis, if this stock is short squeezed, it could go to $1,000 or more. Now, I don't know how long it's going to stay there, guys, but I think there's a lot of upside in this stock. I bought some shares last week. I'm behind Reddit. I believe in what they think, but also from a fundamental and technical standpoint, I don't think there's too much risk here. The stock is undervalued if you compare it to other retailers that are selling at a much higher price to sales ratio. And these claims of, that the stock's going to dip down to $100 or below, I think it's just BS to scare retail investors like us to sell so these shorts can cover. So that's it until next time, guys. I hope you enjoyed this video. Please smash the like button if you enjoyed my content. Smash the red subscribe button to receive more videos videos from me, be sure to check out my daily stock watch newsletter. I post that every Monday through Friday, and check out my private Discord chat for more information on GameStop stock and other stocks. That's it. Until next time, guys. Take care.